The markets finished the week on a very positive note, mainly due to Jerome Powell's speech indicating that a rate cut is coming in September. This made a lot of investors very happy because they want to take some profits from their mega cap and AI companies like NVIDIA, Microsoft, and Google, and reinvest those in other industries that benefit from the energy sector. In today's video, we're going to break down the top 5 value stocks and the top 5 Zacks tool ranked number 1 stocks in momentum. If you're new here, my name is Ali, and I work in the IT AI industry. I've been following the markets for over a decade, and I know how scary and confusing they can be. But don't worry, I'm here to help break them down in normal speak, so stay tuned. First on our list of top 5 value stocks, as you can see on your screen, is PayPal Holdings. Now, they're trading within 5% of their 52-week low. They're very strong fundamentals. Their cash flow is over $4 billion. Their debt to EBITDA ratio is 1.1, and their ROIC is at 22% back in 2024. Now, if you don't understand what that means, on the right here, I have your dictionary set up. ROIC is a return on invested capital, and EBITDA is basically performance of the company. It's a measurement. Is it good? Is it bad? It stands for earnings before interest, taxes, depreciation, and amortization. Now, let's take a look at PayPal. If we look at PayPal's five-year chart, we see that PayPal traded at a high of around $310. And since then, it's had a bit of a rundown. And this was a high of around July 2021. If we go back further, it was even lower, and it kind of peaked during that time, and now it's been consolidating sideways. Now, what we're looking for is this index at the bottom. It's called the MRSI, and this tells us how well is this company doing against its competitors. And as you can see, we're down here in the negatives. We're just about -2, and that's not good. Now, if we want to look at the index for relative strength, we see that it's a range of about 50, and so it's in the middle. There's not a lot of fear. It's not oversold or overbought. Now, what we're looking for is a breakout, and we see we had a little bit of a breakout and then a little bit of correction because people were not confident in the stock. But this is a typical, trend line that we're seeing in this direction, and it's gonna eventually start climbing. Now, we do see that our lows are matching, but as this breakout happens, we're also seeing that our lows are higher and our highs are higher. So this means that there's a bit of a bullish momentum in this direction. And that's what we're looking for. Now, the earnings came out. They did beat their earnings. They reported $8.29 billion, and their estimate was $8.08 billion. So they beat it by 2.5%. And their revenue also got beat as well. So this was just back on July 29th. And you might ask yourself, well, can we take a closer look? And let's do that. Let's look at this year to date and change it to 1 day. And let's zoom out a little bit. So 2025, we had a little bit of run up, a little bit of rundown, and now we're kind of consolidating sideways. One thing that we're not seeing on here is volume. So we need to get that in here, because we want to see volume. Why don't we have volume? There we go. It's usually on here. So we saw a huge sell-off here for large investors, and this was an after hours, so that's why we see that little drop with no candle in the middle. But we're still trading around the ribbon for 50-day, 150, and 200-day moving averages. So we're trying to break above this level and see if we can make it up from here. I don't think this is ever going to go down further from here, because everybody that was, buying at the dip has already kind of sold over here. So everybody here and everybody here sold up here. Now more people bought down here, but the volume wasn't high. As you can see, both last major sell-offs were very high in volume. This means that the the people that are selling these are institutions. So what we're looking for is a bit of a institutional buy to bring back some confidence in the stock. But, we're never going to see this really drop below these levels between 60 and 70. So definitely a very good buy, in my opinion. Obviously, don't dump all your money into it, but it's something to think about when you're looking at these stocks. The next stock that we have here, and that's the wrong screen. The next stock we have here is Chipotle Mexican Grill. Now, their 5-year revenue, CAGR, which is compounded annual growth, 17%. Their operating margin is just above 19% in Q2. Their net EBITDA or debt to EBITDA ratio is 0.3, so they don't have a lot of debt. Now, this is very good news, and they're trading within 3% of their 52-week lows. Now, let's take a look at CMG, Chipotle Mexican Grill. We're going to look at the NYS. And as you can see, recently, we've seen a massive commercial sale here. Big drop right around the 51, 53, and it lost, a good 9.5%. And it's been kind of on a lower trend. Now, if we zoom out and go to their 5-year, we'll notice that even though they dropped to 42, they're still trading really well in terms of price for their 5-year outlook. This is going back to 2021. So they're still above or around their highs from around July of 2023. And it's been doing this, the zigzag to the right, which could be considered, a long consolidation period that we might see more of this. And ideally, we see a little bit more like this, and then it goes up in that direction. And based on these selling volumes here, this might take a while. So their stock doesn't move very fast. I suspect that we're probably going to see this extend into at least early next year to mid next year before we see any changes. So keep that in mind when you're looking at these stocks. Now, if you look at their MRSI down here compared to their competitors, they're doing pretty bad. But just earlier in the year, in June, mid last year, they were doing really well against their competitors. And if we look at the relative strength index, it's still kind of hovering, above the 30 mark, which means that it's not being oversold. And I think that's pretty strong indicator. Now we look at their earnings, and in their last earnings in July, they did miss by about 1.5%, but still posted pretty strong 3.06 billion in revenue. And that is actually very, very good. Now, they did beat their earnings slightly by 1.24%, so that was nice. And even before that, similarly, they continue to beat their earnings, but the revenue slides a little bit. Now, even though their revenue did miss the 3.11, it did go up from the time before that and the time before that. Now, there is an earnings call coming up September, so we'll see how that goes. And based on this earnings calls, we could see this move in the right direction. So keep an eye on it and watch this list. Our next one is Lululemon. And I know I never think about Lululemon. It's kind of a weird thing to think about these days because I just think of them as a clothes company. But they have had 10% annual sales growth, and the gross margin is 56%. That's pretty big. They have a very positive net cash position of about 1.2 billion, and their ROE, which if you don't know what that means, is return on equity, not record of employment, was 12% for last year. They're trading at 52 weeks low. So let's take a look at Lululemon. Now we're going to look at Lululemon on the NASDAQ, and we see a kind of a different chart. And this is the 5-year. This is the 5-year chart. We go back all the way to August 2020, But even if we go further back, we've seen that since then, they've kind of been doing a bit of consolidating, ups, downs, consolidating, up, down, down, and now they're heading in the low direction. So we've seen some lows, some resistance there, and then it finally kind of broke here in recent days. So let's look at our year-to-date chart, and we'll notice that the lows are lower. I did not want to draw that. The lows are lower and the highs are lower. So we need to keep that in mind. But there was an earnings call where they beat their revenue by just 0.5%, but then we saw this massive sale, all red. Now, if you kind of time this, a lot of people move money from industries they think is not gonna perform well to industries that they think they're gonna perform well. And what would we see a lot of people do during this last 6 months, or 3 months, is moving money into AI and mega cap techs, because that's where the returns are. So this doesn't look like it's based on their performance. This is not performance based. The market is not moving based on this company's performance, because financially they're doing well. There's an earning call coming in very close here, September 4th. And, you know, we're going to see how they do, but all of their earnings were green. 3.5 billion, 2.36 billion. And obviously they slowed down. Their sales kind of slowed down from the last quarter and this quarter here. So they did some really well, and then they slowed down a little bit, but still beat their earnings reported. So you might see that as a weakness. I think that the stock has potential to move back up if this next earnings is beat and they keep moving in the right direction. So 2.36 here, they're estimating 2.54. If they beat that, this might provide some upwards trajectory for the stock, and hopefully it does a little bit of this in the near future. The next one is Duolingo. I didn't really think about Duolingo ever, because it's an app on your phone. How is it making so much money? But apparently their business is actually doing very, very well. They're subscription based. So when you have subscription based service and people stay subscribed, that means that they actually like your service. Their revenue from subscription is up 42% year over year. Their free cash flow has been positive since last year. They have net cash of about 450 million in Q2 2025. They're trading within 7% of their 52-week low. So if we look at this one real quick, we'll see that their stock is actually a little bit expensive, but that shouldn't deter us. Now, if we look at their 5-year, I guess they've only really been trading since, it hasn't been 5 years yet. So you can see that they started around August 21, which is about 4 years, and it did a lot of sideways. And then over here, they brought in about 240 million, but their earnings, they beat their earnings by 39%. Then we saw a massive buy-in. And obviously, everybody that bought at the top here ended up selling over here. And the same thing is, people were just looking at this as a short money play and sold their stock. And then we saw this spiral down. But right here, we saw this massive buy-in. Okay? Massive buy-in right here. And if we look at that, volume was 322. And we saw massive buy. Now, let's look at their earnings. Again, they beat their earnings by 55%, which is good for people who earn on their stocks. While this might not be a huge company, they beat their revenue and their earnings are high. So I suspect that right around earnings around 5th of November, this is going to do this, and then there's going to be an up. Now, whether this is going to keep going up or is going to go back down, you're going to have to watch out for that. That could be another short money play where you buy and you sell. And if you look at the previous buy and sell, this was about a 93% jump in their stocks. And that's why I think this could be a short-term money play. If we move sideways a little bit, and then this shoots up and goes back to its original highs, we could be looking at a 64, like around the 60% upside. And I think that's really interesting for day traders and people who are looking to make a quick buck on non-giant mega cap companies. Let's look at our last one is the trade desk. Now they're trading within 6% of their 52-week low. Their 3-year revenue compound annual growth is 52%. It's not as high as some of the other ones we've seen, but they have an adjusted EBITDA margin of 35%. So their net cash on balance sheet is $1.1 billion, and that's pretty big for this company. So let's take a look at the trade desk, and their ticker is TTD. Okay, so TTD. Let's zoom out a little bit. Now we see their stock has had a good run, a little bit of moving in this momentum, and then we've had a little zigzagging, and then it broke its all-time high. So here it broke its all-time high, here it broke its all-time high, and then here it broke its all-time high. And now what happened? Suddenly we had massive sell-offs. Now let's dig a little deeper into why there was this massive sell-off. And let's switch to the 1-day mark. Okay, let's zoom out a little bit. So let's take a look here. We had an earnings call. They missed their revenue by 2.36%, but they beat their earnings by 5%. Now we saw this massive sell-off. And this was obviously after our sell-off. There's no candle in the middle there. And it just went on a tumble. Now, here's what's interesting about this stock. They beat their revenue by 7%, but they missed their earnings by 27.5%. Yet there we saw a big amount of volume go up in this area. Now, why did we see this jump and then this consolidation into the right direction? Well, people saw an opportunity to buy and then hold until they broke this level, and then we saw a massive sell-off. Then it went back up slightly. Then we saw a massive sell-off. And even though these earnings here, they barely met them, and their shares, their earnings were barely met, and it's pretty low. And their revenue was beat as well. We still saw a bit of a surprise here. Now, if we zoom back out a little bit, you see that even though they're at this level, they're still trading above their all-time lows. So we need to take that into account. And obviously, there's an earnings call coming up. This might be another one of those, and then down. I don't think this is going to break its all-time high over here. I don't think that's a target. I think most people are looking for a bit of a rise to the previous all-time high, or the previous highs, which is about a 70% upside. So as you've noticed, these companies have strong fundamentals. The stock price does not really indicate the actual fundamentals of the companies. You're looking at a company that has positive growth, yet people are using the stock as a way to make money, quick money, buy low, sell high. So if that's something that you're interested in and you know how to set up your risk mitigation, so let's play out a scenario where, let's just clear all the drawings real quick. Let's say you want to play this out. You're buying around between 50 and 55, and then you're looking for an upside of about to around 90. That's about 65%. Now, this is not financial advice. I'm not telling you to go buy any of these stocks. But what I'm saying is, if you want to try to make money and you have money that you can afford to lose, you could try to buy low and set your net losses at this level, which is the previous all-time low around 42. 42. So whenever you buy a stock, you got to think, how much of this stock am I willing to lose? What is my risk tolerance? If your risk tolerance is, in this case, 18%, 19%, then that's where you set your stop losses, sales. If you have a shorter risk tolerance, you might want to set this around 6 to 8% and say, okay, I'm going to buy at the market of 55 right now, but if it reaches around 50, 47 to 50, sell it. Now, at the same time, you set up your sale order for your gains. So if you're willing to take 30% profit, 40% profit, 50% profit, 60% profit, or you could average out your sales. So if, let's say you have 100 shares, you sell 20 at 20% profit, 40 at 40%, another 40 at 60%, and then the rest if it reaches higher than that. Because you never want to sell your entire position in case the stock, goes really high. Then you're going to miss out. Again, it's not financial advice, but if you're thinking about playing these companies that have strong momentum, we know they're not going to go anywhere. They're making money. They're producing actual goods and products and services. So keep that in mind. The other 5 picks that came from Zacks tool, which looks at what are the strongest buys in the market, all of these ranked 1 in recent earnings, and they had a momentum score of A. We got Pagaya Technologies, TAT Technologies, Lumentum Holdings, Arista Networks, and Mitsubishi Financial Group. Their year 3 months performance, as you can see on this chart, is actually crazy from the top. Pagaya, 101% returns. We had Lumentum at 57%. Arista, I watched this one earlier this month, 46%. This company is an AI cloud compute company. So they're kind of like a managed service provider for IT people, but for the AI sector. So it actually looks like some of these might be a good play. The momentum is super high. And it's something, it might not be time to buy since their performance has been so good. But let's take a quick look at PGY just to see what it looks like. Okay. And if we look at this 1-year chart, we see that there's been an incredible bull run after a bit of a miss on the last, on 2 earning calls where we saw a dip, we saw another dip, and then it kind of went sideways. And then we had a positive call and people just went bananas. And then we had a lot of institutional buy right here in the after hours area. And this just shot up. Now, these institutions obviously took some profits here because we see a huge, me and you aren't going to move the market this level of volume. Now let's look at this earnings call. Sorry, this one first. They beat their earnings by 171%. So their estimated was negative 14 and they reported 10. Now the revenue only was 1.6% higher. Now, what triggered this big sale over here? It's very normal for people to take profits. It doesn't mean that the company's doing bad. Okay? So all those people that bought here and then this jump, they said, hey, this is the top. Maybe they had, they bought over here and they're like, okay, this is nuts. I'm not gonna wait any longer. I just made 165% return. So just because you see sales happening in the market doesn't mean that this is negative. You got to really follow the institutional money. And even then, if it doesn't make sense, like this earning call was good. So why was there a massive sale? And even though it did have a massive sale, you notice that it didn't really go all out. It went down, it wicked all the way up, then it wicked down, and then it's doing this, which means that there's still a lot of upwards pressure from buyers. The more people that are selling, and the stock goes down. But if there's a huge amount of people that are buying, the stock does the zigzag. And that's what's happening here. So we do see a lot of pressure down. We saw a lot of downwards pressure here, but there was equal upwards pressure, which kept it flat. Now we do see we're trading right now at 37.72, which is just below, the 40 mark where it wicked up to. So I still see very strong momentum. Now, if we look at the RSI at the bottom, we see it's closing up on 70, which means that it's closing into the overbought category. So we got to be really careful because there's a lot of people in it right now. So everybody that bought here is going to look to sell at some point when this thing breaks out a little bit more. So if you bought in this dip and you're looking to make, 50%, you're likely going to see a massive sale happening. If the stock does this, goes up here, then we're going to see a correction and then a bounce and a correction. And this might happen for at least a few more months. So I hope this really kind of explains how the market's a little bit of how the market moves in terms of strategy. Now the other ones on this list, we have Lumentum and Arista. I really want to show you Arista because Arista Networks is doing some crazy stuff in their field. And I know because I work in IT. And I can tell you that, they have a very strong business model. If we look at their earnings, 2.11 billion, and their earnings is at almost 75 cents, and their revenue 2.11 billion. Before that, 1.7 billion. Before that, 1.9 billion. Before that, 1.7. Before that, 1.6. So the revenue's consistently moving in the right direction, and we see a lot of volume down here. Some would say too much volume down here, which means that people are trying to play this system. And we see this nice spike back into all-time highs. They're breaking their all-time high over here at 141. So let's zoom in a little bit, clear these drawings. And if we look at their daily chart for the last 1 year, we saw something happen recently. So there was some sideways consolidation, a little bit of a sell-off. We saw this massive volume happen here. Went up, went up, went up. Institution sells over here. We saw this gap that was created. Then we saw it go down. We saw more volume sales. We saw more volume sales. Wicked back up. A lot of buys here on the positive green. Sideways up. Massive buy. And now it's going sideways again. The question is, if we look at their RSI down here, There, it went up above 70 right in this area. And now it's hovering between about 62, 63. If we remove the RSI and look at the MRSI, it's well above the green line, meaning that it's performing better than its competitors. And again, if you believe in the fundamentals, the earnings, and you think this stock has a way to go, you're going to have to wait a little bit to see how it moves from here. Ideally, the best place to buy for, in my opinion, not financial advice, is not to buy at the dip, but you need to see some positive momentum. And even if you buy at a slightly higher price, at least the probability of that momentum carrying you further is higher. So I'll be looking for these guys to break the 150. And I think if they can break the 150 line, we're going to see a trajectory in the positive direction. So we're looking for at least about a 14 to 15% increase from the current price. And then we might see them go up to 175, 180 based on previous trajectories. But in between that, we might see something like this, then a breakout, and then a correction, and a correction down, and then a breakout. That would be the ideal scenario. But over here, we're going to see this earnings call. So if we look at this earnings call, the last one was 2.11 estimate, and they came at 2.2. This one, they're estimating 2.27. So if they beat this by a nice margin, we might see that breakout happen earlier. So keep an eye on that. Lumentum Holdings and TAT Technologies, Mitsubishi, definitely look those up, and we may cover them in the future, but I feel like these technology firms are where the movement's going to be. If you enjoyed this analysis and this style, please leave a comment below. Let us know if you like it, you don't like it, if you have any suggestions. Definitely smash the like button. If you're not subscribed, please do so. It really helps this channel grow and reach more audience. Thank you so much for staying till the end of the video. I really appreciate it, and we'll see you in the next episode.